Hello, everybody. Welcome to day 2 of the Outlaws first official HFX Bootcamp. We are super excited to share with you guys today what we're going to be going over, which is the 3-candle rule and also how to find structured entry zones. So these are very vital tools to actually take your trading to the next level, to be able to know not just a support or resistance, but where it could move around those areas and to get the best entry possible. Another thing is with these entry zones, you guys, that you can get multiple entries off of one move. So without further ado, Cash Money Clay, if you want to come up and drop some sauce.
How is everybody doing tonight? This is a exciting day 2 of the boot camp. This is awesome. This here, learning the 3-candle rule and learning structure and support areas. That's the biggest things of trading, pretty much. When we do HFX, you have to know these areas, and the most precise things you got to learn to do, when you trade this stuff. So basically what I'm going to do, I'm going to share my screen and we're going to get right on into it, into Hourglass. Just a little bit. There we go. Let me refresh this quick. And now, I have been testing this strategy of the 3-candle rule for quite a while now. And for me, because I've done a lot of different strategies of marking up charts over the years, which a lot of people do know. This 3-candle rule, basically, we take all of our trades off a 5-minute chart. And so basically, like 3 candles, the 3-candle rule is 5 times 3, 15. We're going to mark up stuff on the 15-minute chart is what we're going to do. And you can do it like people trading taking trades off 1 minute. You mark up on the 3, turn it back to the 1, and take your trades off of that. It's the same thing. You do it with different on time frames and everything too, down, as you keep going. If you do longer term trades, you do, obviously you want to take 1 to the 3 hour chart, to mark up. So I do, 5 to the 15 minute, mark up my stuff. And basically, first of all, what we're going to do, we are on Odd Chef. And right now I'm kind of looking at this chart and kind of thinking, is it good? Is it moving, flowing good? Is it matching, the trend? My strength meter over here is matching to what it's saying it is. It's on a downtrend that we're showing. So the chef should be stronger than the odd pair. So that's the first thing I always look at to make sure. And then making sure, looking at this, we got good down movement. Everything's looking good right now. And the RSIs, we're below the 50. So it gives us some other indicator that we are in a downward trend too. So let's go over to the 15. Now this here is key in learning how to do this. This is very, very, very crucial of marking up charts on this one here. So basically what I'm going to do, I'm looking for structure areas, and I'm going to look for different on a downward trend. I always look for what it's going to pull back to in the market. So what I'm looking for is resistance, an area of resistance on a downward trend. So that's the first rule. Is so downward trend, I look for resistance, what the market can pull back to take puts, because we want to take puts on a downward trend market, because we do not want to trade against the trend of a market. We don't want to take calls on this market, on a downward trend. We want to go with the trend of the market when we trade. Because if we try to go against it, it can do a big reversal in the market too on us, and that's when we get spiked out a lot of times too. So basically, the first thing I do is get this pulled up, and I come over up here to this little trend line arrow right here, and there's a little arrow next to it, and you just pull it down. And what I want is horizontal lines, is what I use. So I just take my cursor, pretty much, and just take my cursor and looking for areas in this market. And basically, like right here, basically top of this candle here, we got some good structure like going through here. It's been in this area before, so we're looking for multiple times in an area. So I'm going to put a line right there, and I always take it red, because red we always have, you know, by matching the other candle, other resistance on the chart too. So that's how I like to mark my stuff, and I always lock it into place so I can't move it. And I always, and that's going to be like the top, like the bottom of that resistance area. So I'm looking for another area where it can come back up into. So I'm liking areas, like multiple areas, like back up into here. You can kind of see, I'll put this up here. So that's just what I like right in here. I like these areas. It's been in here multiple times, as you can see. And I'll show you like up, like in this area right here, you can kind of see it's been in there quite a few times, and it's been in this area right in here quite a few times too. And if we go back and take a look, you know, more times it's been in areas, the better off we are, because it's more of a confirmation that, yeah, it's been respecting these areas quite a bit. So, and we got a lot of area right in here that's been respected here too, and multiple area back in this area too. So we are like, this is actually a really good one to actually like say this is a good, you know, comes back up into the area. We can actually take puts off of this. So, and then, you know, basically this is how I do it here. So let's get rid of some of this stuff here. Click, and then that's how I basically mark a downward trend market. And then basically I go back to the 5, and I want to check it on the 5 minute and see if it's like a good multiple areas again. I always want to check to make sure. And like there's a lot that's come into these areas back up in here. You can actually see all this stuff coming up in here multiple times. I mean, it's respected this area a lot, and it over here too. And see if we can go back a little bit too and try to find a little bit more in the areas, because absolutely in where my markings were at is absolutely perfect. You can just kind of see where it's just multiple times in this area. So that's a really good area for we have a little pullback when it comes up to in the market to go to get into. So when it gets up in these areas, you can take puts off of this. That's a really good area, especially with the Bollinger Band coming down like it is right here. And it means it can pull back up in here and then take it back down for a put right here. So this is actually a really good one, good zone area in here too. So this is actually really nice. I like this. And this is a downward trend. I'm going to show you different ones here. I'm going to go try to find some, I'm going to go and look for an upward trend now too, and see and show you how to do markup support to find those support, because sometimes it can be tricky on different ones. And this one there, just Odd Chef, is you can kind of see it's working up in there, it's pulling up in there. It's going to be good to, you know, take a trade, take a put out of this zone area when it's kind of getting up in here. You always wait for your indicators when and to confirm it too. So let's look for an uptrend here. See if I can find one. This market is telling me kind of it's on a downward trend right now. Here, maybe let's look at US CAD. Let's take a look at this. Now US CAD is it's pretty good. It's not too bad. Let's go to let's check on there. Here we go. I like this one better. US to the chef. This is actually a pretty decent one right here to look at too on an upward trend. So, and I do the same thing, 3 candle rule. We're doing 5 going to the 15 to do all the markups. I do all my marking up on the 15-minute chart. I hardly do any very little markups on a 5-minute chart. If I see some softer support areas or resistance areas on a 5, I will put a line in there, but not very often. This is the 15-minute. You're going to get your harder supports and resistance areas off of this, your zone areas. And it's just kind of doing the same thing here. The only thing is a little different is we got a little pullback in the market right now. So, which I'm thinking, I'm going to show you. I'll put a line in here, and I always mark my support areas green. I always like to use green for it and lock them into place. And why I kind of like this area right here, and this is key right here too, is I know this is tricky at times too, finding these areas. I like these called test and rebreaks right here. I like these because they kind of pull back into the market in these areas right here. And there's a good a close and an open area right here, and multiple areas back in here is what I like to see. If I can find multiple areas like that, that's a good starting point for you for a floor, because I always call it the floor. That's a really good start, a really good point. And then, so I want to find a zone area. I want to find an actual, area where this thing could come down back into, and I see a lot of places. I see different places where this thing could actually go. And I see a spot back down in here where this could actually pull back into the market back down farther here. So, and I see, because I got areas back in, like a test and rebreak back in here too. Another one back in here. I see multiple ones back, and then got open and close. Got a close, open, close right here, or open, sorry, back here. And I like those areas in there. So that's basically telling me that's a good area where it can pull back to the market. So let me zoom out here. Let's see if it's kind of looking like it hasn't been, it's been quite a while since it's been back in this area, actually, for quite some time, actually. So you can kind of see it's been back, like I like these areas back in here. These are good areas, like multiple, like this whole chunk of space in here. I like that stuff. And I like it's respected this right here too. And this is the stuff I like looking for, like that right there is key into the market, because it's been in there, tested that area quite a few times in the market. So let's go back to the current price, because you always want to mark around current price. There we go. So basically, so we got some markings here, and this one might have to work back down just a little bit to get back to our zone. So let's switch it back to our 5-minute candle here, where we want to take trades. And really, it's not too bad if it works down in a zone. Now, here's the thing is too, if it doesn't quite, we have an awful big spread. The US is at 63 and the chef's at 30. And don't worry about, sometimes they won't pull back quite to the zone, which is fine. They're just, sometimes there's just so much momentum in the market of buyers in the market, and not usually enough sellers selling the market down, to pull it back down far enough. But it will eventually work back down in these areas here, because, like I say, if you can find these areas and be patient enough for them to work it down into the areas and take these for calls back up again, that is total key. And that's where a lot of times, when I'm trading in the mornings, that is a lot of times, waiting for these pullbacks in the markets to happen, marking up different charts. I mark up about 3 to 4 charts in the morning, and then I decide which I like, and stuff that comes down in the zone areas, come up, if it's a downtrend, I'm looking for it to pull back to come up a little bit so I can take puts for it. I'm just kind of, this would be a waiting, if it don't come back, then we remark the charts up again, because you kind of want to, after about every 15 minutes, go back to the 15-minute chart and actually go back and see if you need to adjust your lines, your support and resistance lines too. And here's another thing that I like to do too. sometimes I don't like this lines on my charts because I like a cleaner chart. I like clean charts. So, and here's another thing I like to do too. So I come over to the paintbrush here, the brush, and I'll go down to rectangle. And a lot of times what I'll do, I'll come up to the top side of that line of my support line, and I'll just drag it down and make a rectangle box in here. And sometimes I like to do that, and I lock it in. And a lot of times I will go and delete these lines out, and that's what I like. And I'll just leave a rectangle box on there and wait for these to come down in these zone areas to take them back for calls again. You know, just being patient. You got to really be patient. You can't force the market to actually, you know, take trades. You know, you got to let it come down in zone areas. You can't say, hell yeah, it's going to reverse and should go back up and guess at it. This is kind of where we're helping you take out the guessing game, and helping you get into these zone areas where, like, this one's starting to pull back down in, starting to come close to it now, and take it for calls, take it for the back up on the upside. And then, you know, we have a good sign that this thing is going to go back up. We're going to have the meters all matched together at the same time. This thing's going to go back up into other direction like we want it to, you know. So the whole thing is trading with the trend on this one. So we are going to trade for calls on this, since it's an upward trend of the market right now. So, where did let's see, odd chef kind of disappeared on me. There it is, 54.30. So yeah, US kind of dropped, and that's what you see too. You'll see the strength meter here, it lost, you know, the US lost some strength, so it's gonna like drop this down in the market here. So it's actually making a good, really nice pullback in the market right now, saying it's coming down to our area. So this is like absolutely like just perfect perfect to come down into. And this indicator, this EMA through here too, this 20 moving average line on an upward trend market, it can actually use it. You can actually, sometimes they'll use this as support too. These will come down and tap these and actually use it for support and turn around and go back the other direction too. So, and that's another key thing to pay attention to, is that 20 moving average, that black line in there. And the way this is, the way I like this right now, because on an upward trend market, I like the candles between this red Bollinger Band and the 20 moving average, which means we have good momentum in the market going upward in the market. When it's down here, when it's usually below, if it's going to be down in this area here, usually like our meters are going to be down or drop down farther underneath the 50 on the RSI, which means we're having a little bit more, we're having a shift in the market, and it can continue to work down. And a lot of times you have to pay attention what the strength meter is doing. You got to remember these numbers, you know, you got to remember them, because they do update quite a bit, really, like often. Sometimes like every couple seconds, every 5 seconds, they can update with it, depending on the time of the day that you're really trading too. Because like in the mornings, like this morning, they were really jumping this morning. They were really, is wild west this morning. And now you can kind of see we're having a little bit of a pullback. So, you know, who knows, this next candle out, let's see what happens here. We might as well just kind of see what happens. You know, if this thing's gonna make it might still work down, but it could take back off the other direction here too.
This is awesome. This is like showing real time what's happening and literally going in that zone.
Yep.
And as you guys can see, the meters on the bottom, they're still in motion. They haven't turned yet. And it's kind of stuck a little bit.
Our glass kind of froze up, didn't it? It did. Let's see. Let's just refresh it, and we'll come back to US chef. There we go. For some reason, it's not updating right now. Oh, there it goes, finally. pretty much it's in our zone area right now, and it's looking like we have some momentum pushing the market back up right now. And as we can see, our US did gain like about 3 points from what it was, because it was down to 53 before. And now we got and now the chef's going to go, this thing is actually going to, it's actually going to go up. So yeah, as you can see, the chef dropped 2 points, and then literally the market it actually went up even higher too. So it's going to even keep going up. So this was a good example right here, coming down in the zone area, being patient, take it for a call. It was all right there, and watching your currency strength meter and watching everything just switch and go. So this was actually a really good, that zone area that I had marked up in here was actually was right on, because I think, get it close here, it was kind of something like that in there was my zone area for that to go, to make a reverse to go back up. So that was absolutely ideal. That was perfect. So if you're being patient, waiting for stuff like that to happen in the market, super, I mean, you should be like super deep in profit, be clearing this already by now. You should be good. So that was a good example on an upward trend of a market for you guys right there. So let me try to find one now that's in a, see if I can find one in a consolidation right now.
And you guys can see, like Clayton said, if you guys remember the black, the 20 EMA, it literally bounced off that, like he said, as a support. That was like a perfect example of everything he was just telling you guys.
Yeah, that was awesome to watch that actually happen like it is, and it does it in that EMA actually works on a downward trend too. If it's in between the green Bollinger Bands and that 20 EMA, it can come back and hit that Bollinger, that 20 moving average, and then go back down again too. So it works the other way also too. But when in a consolidation market, this 20 moving average EMA does not come in effect anymore, because it can go through and it doesn't matter in a consolidation of a market, because it's just going to move, consolidation. This is actually a good consolidation of a market right now in here. We are on our Euro JPY right now. So this is actually a good consolidation of a market right now. And I'll show you how, and what I'm going to do, and I'm going to go back to the 15-minute 3-candle rule. And also on a consolidated market, I mark up both. I mark up support and resistance on a consolidated market. So I can take, it comes up, I can take stuff for calls, and I can, or goes down, I can take it for calls, goes up, I can take it for puts too, in a consolidation of a market too. And another way of a sign of this market being in a consolidated market is this RSI. This RSI is moving in between the gray line and this red dotted line. If it was down below this line here, that market would be actually going down. It would actually be going in a downward trend. And right now, this is a good example. It's kind of was telling us right here that it was going to start going in consolidation. It moved up in here. It can move up and above, like it is here, going up and down this the 50 on the RSI. So that tells you it is in a consolidation of a market. So let's go back to the 15-minute, and we're going to mark up. We're going to do the same thing here, but we're going to do both now. We're going to mark up support, and we're going to mark up resistance. So what I'm going to do, I'm going to go right to the bottom of that candle, of the current candle, is what I'm going to go to for a support right there. So I'm going to take that one, and this is where it gets tricky on a consolidated market, because can get kind of confusing, and I understand that. I always like right here is a good example. So it comes down to right down to here, and that's going to give me a good zone area where it can pull back down to into the market right here. So that's actually a good area right down in there, which, as you can see, it's respected that area of what I created, in here multiple times. So it's created a good area back down in there, so it could come down to, and that is my support areas. And so then basically I go to the top. Okay, So we're going to do some resistance. We want the roof. We want to find a good roof area. And so I'm going to mark the bottom zone of this roof. I'm going to mark this area right in here. So this is a good area back in here. You can see multiple times that it's been in this area. You can see it back in here. Like this is a good area is back in here. And then we're going to do another, so we can find where this thing's going to, where's the top? We want to find a top. We want to have a zone, actually zone area. We want to have a top of an area, which, you know, obviously we want something where it can come into and okay. And then we can kind of match everything that goes everything together with our meters too, or indicators too. So, and that's how I would like to do. I marked all that up to the top there. And a base, I just came to the top side of this wick up here. And because I can see in different areas where it's came down into. There's good areas where it's come down into. Put that back. And there, that's a good area right there. So basically, let's go back to the 5, and then you're going to really see where these areas are at in this market again. Because it'll just basically tell you, like, yep, it's been in here, been down in here on support. You know, it's been in a lot of area. I mean, look at all these. I mean, the wicks are keys too. If wicks come into these areas, that's a good thing too. You want to look for multiple wick areas. So a lot of the times, you know, we're looking for stuff multiple times in the past. We want stuff in the past because the charts has a pattern. They always repeat themselves in the future. So we're repeating. It's always, the charts always repeat themselves no matter what. And they come in these areas multiple times every day, every few days it can come into areas, but it's tested areas like this. You can kind of see it's been in, and even on the upside too, has come into different multiple areas of resistance up there too. So this is like actually good. And, you know, we were actually, you know, this came up here, it tapped it, you know, it didn't quite reach it. I mean, we're getting to be oversold, and there's and our meters, this is like when I see a lot of consolidation is when the meters are close together, like the point difference, you know, I like, when I trade, I like stuff to be 20 points or better, 30 points. You know, I like the spread, you know, I like big multiple spreads when I'm trading, it's what I like, because you're going to see the most movements in the market, the volatility and the volume of the market actually moving in the market. So, and I did this wrong. This is my fault. I'll change this. So I always mark these red too, because it is a resistance area. So we watch this come up into here, and we can take puts. You know, if we would have caught this in time and watched everything turn, we could have probably just went in for a quick like sell off of this and took this real quick, you know, and could have been in profit. You know, so if this thing pushes back down, wait in the zone areas again and take it back for calls again. And that's how very much just waiting on a consolidated market and being very patient on consolidated market. And, you know, trading consolidated market is not for everyone too, because sometimes consolidation of a market that you have, like if you've been on a lot, that you can see it can be even narrower than this. This is actually a pretty good, actually moving consolidated market. It's actually got some flow to it, which is, does make it easier for it to trade. When they're closer together, it is a lot harder to trade because there's not much movement, those candles are gonna go. You won't get bigger candles like this movement in the market. You'll get these little ones that just move like very slightly in the market. I mean, you might have barely an area where it might barely move about like maybe 20 to 30 pips, and that's not very much into a market at all. You know, that's very little of a movement. You know, I should say like pipettes, you know, because we deal with pipettes, you know, here in HFX. You know, pips are not like a big thing that we deal with here. It's pipettes usually. So, but this is the best, you know, way of a consolidated market, how it works. Just being very patient with it and letting it come to you, you know, because, you know, now you can kind of see, you know, the euro the euro is, you know, only 4 points difference from the yen right now. So this thing could get tighter. What I'm seeing now with the green Bollinger Band starting to come up, the red starting to kind of bend down. I mean, this thing could get tighter and consolidate right now. So yeah, this was actually a good one too, to just to take a quick look at and see for you guys that to know. But that is pretty much that's pretty much what I do every day when I'm marking up charts. That's exactly what I do. And you know, I do this every day. I've done this, you know, every day for the last, you know, 2 years. I've marked up hundreds of charts myself too, you know, and I just would sit there and practice and practice and practice. And you got to, and the main thing is practicing and marking up these zones and watching them too, and making sure if they're not respecting areas, here's a key thing too. If they're not respecting areas and they want to go through, then it's time to get off that pair and go look for a different one if it's not going to respect their zone areas. That means there's a shift in the market happening. Usually like the euro gained a bunch of strength and the yen lost a bunch, and there was a big shift in the market happen. Something, maybe a full red fold or something, some bad news came out or something to make the market shift. But that you just go and find a different pair. That's not a big deal because we have a lot to choose from. So that's how I do it every morning. That's how Faith does it every morning too. We mark up charts, and hopefully this, like, for everybody, you know, hopefully this helps everybody out and understand. And it's a lot to take in. And this is why we're kind of going to do what we're going to, you know, this is why we're showing you guys to help you guys out too.
Awesome, Clayton. Thank you so much. I'm going to shut off the recording now.